What is going on, everybody, and welcome to another technical analysis. And what I'd like to do in this video is provide you guys some technicals to get you prepared for the week ahead. So that sounds like something you're interested in. Consider subscribing, as I do also provide essentially an overall market thesis that I put out weekly on Saturdays to give you guys some updates on essentially my strategy for the week and what I'm thinking could potentially play out in the next couple of months. Again, I don't like to think too far ahead, but I like to know the schedule of events, whether that's for earnings or for essentially monetary policy or any other major event. That way I can focus on what is important throughout the week. So if that sounds like something you're interested in, consider subscribing. Also, you can check me out on X at Hammy137 as I do provide daily updates of the market and what I am seeing. So let's go ahead and dive right in today. As you know, and if you had watched my previous video, we are getting into a big week. We got a lot of scheduled events, so you have to keep that in mind. Not only will there be monetary policy, which not expecting anything from that, but we have Powell, we have non-farms, and we have big earnings this week. So much so that they are pricing in so much for this week. They are anticipating this week to be massive. It is one of the Super Bowl weeks. Between this week and next week are going to be massive. You're going to get so much information. They like to flood you with information in hopes to get some details by you. So with that being said, we're going to dive in these technicals and kind of see what we're looking at. Now, one big concern I'm seeing with SPX, we have started to see some massive sell-off for the past couple of weeks, which isn't typical for earnings cycle. There's a lot of worry concern, again, because of the election and presidential candidates. There's a lot of uncertainty, and the market does not like uncertainty, and we're seeing that in the charts. And so as of right now, between the 20 and the 50, we've broken this down. We've essentially gapped down, bounced, and now we're kind of consolidating here. This week is going to be important. We need to essentially hold the 54.28 here. If we do break below that, what you're really looking at is you start looking at the daily 200. Yes, the 100, some people like to use the 100. I don't really like it. It's more of a speed bump than anything else. So I don't even use the 100 EMA. I use the 200 because that will definitely pivot the market. If we break below that, that means you better hold on because things are in really bad shape. But typically when you start getting around that 200 average, the market starts to flip at that point. So this is why this is critical on what happens in the next couple of days. But we do have the 20 weekly roughly sitting around that 52.45 mark. So you need to keep that in mind. If we do break this level, that's kind of what I'm shooting at. Again, you're looking at higher time frames. So you can expect that the next couple of weeks we may see down below that. Now we are anticipating potential 50 basis point cuts in September is what they're projecting. Again, you can't go off of projections. The Fed are going to have to be reactionary. Maybe they start getting reactionary and start cutting. But we will see. Things are in very bad shape, and it's starting to essentially present themselves. So again, ultimately, we know that the Fed are starting to see it too when they start cutting, because again, they're worried about inflation. If they start rapidly cutting right now, then things may change. So again, the Fed want at least housing to start correcting. We're slowly starting to see that turn, which makes me think that maybe September may not be it. If they can kick it down, they will essentially wait till February, in my opinion, when whoever is sitting in office at that point will have to inherit a hot mess. So right now, this would be critical for this week. Again, given the uncertainty, I wouldn't be surprised if we at least try to pull back to the 20 weekly, which is again roughly around that 52.60 mark. We have some support here, so kind of really watching that to see what happens. But this week, this critical level here, again, if we've been rejected a couple different times, roughly around this 5,500 mark. So that is kind of your top. I wouldn't be. We could also just sit in here and chop, but again, you have a lot of major events this week occurring. If something bad plays out, which you can expect because interest rates are high and the consumer is very weak, you're going to see some really bad earnings, and it's going to be enough to break us below this level is ultimately what you're watching. So that's what we have for SPX. Again, they are pricing in, I think, 104-point move this week. So they're pricing in a lot. Typically, on average, they only price in about roughly around that 60-point mark. And that's only on big scheduled events, or it can even get below that, roughly in the 50s. Just depends if there's nothing really going on. So that kind of gives you an idea of what they are anticipating this week. Let's take a quick look at Bitcoin. Bitcoin consolidation. Again, there's getting a lot of hype around potential president candidates about Bitcoin being a reserve currency. So this thing is coiling very, very well. When you see a big consolidation like this, you're going to get a big, big move. So just be mindful of that. Again, it could go either way. So don't anticipate one way or the other too much. Hopefully you grabbed it back down here. So you're already up quite a bit. Take some profit and then maybe just take a little bit more off the top if this thing does decide to start shooting up. But again, you won't know for sure. So just keep that in mind. Just as much as it's pushing up, it can push down. But on average, it's good to understand that about 6 to 7 months after a halving is when you actually have your bull market. That would align with everything falling into December time period. Getting that last push. Again, if we can price in a recession, you have to understand crypto isn't essentially immune to what happens in the markets. That's why it's really important to know economics in the market as well and know events, because they do affect cryptocurrency. Cryptocurrency isn't a standalone thing. Economics are always going to play into everything. So really watch this closely and see how it does moving forward. Now let's take a quick look at gold. Gold is starting to pull back. Now this is concerning. Hopefully this is a support roughly on that 221 here. So hopefully this bounces out of here. If it does not, that is concerning. If commodities, if tech, if finance, if everything starts selling off, that is a huge, huge problem. That means there's a bigger thing occurring, and this is what I've been trying to forewarn everybody, because everything is very delayed. You have to understand the narrative has to be played out, and you're being propped up by essentially no debt ceiling over the past year and a half, and that is essentially what's holding up the market, or else this thing would have cratered last year. But again, you can't bet against the house, because the house will win and they'll figure out some way to delay it. Again, they're planting seeds to cast blame or whatever it may be. So again, gold here still looking like potentially it could really rip, especially if it maintains this level here, this 219. If it can hold above that, you may see new all-time highs. You may see anything over 230. Once it gets at that point, it's a price discovery mode. At that point, you should already be taking profit as soon as it breaks the new high. But again, you definitely want to keep your stops very close to this, because if it breaks below this, you could see it drop all the way down to 212 again. So just keep that in mind. Commodities typically, or gold will typically push up when there's uncertainty. Then when there's a little bit more clarification, gold sells off pretty quick. So you have to keep that in mind. So moving forward, we'll take a look at Tesla. Now this bad boy, this thing, I've been talking about this massive wedge, and it's retesting it now. And I said that this 220 is going to be an important level for Tesla. It's not saying you can't wick down into the just below 200, but there is a lot. And I'm trying to emphasize this. There is a lot. And again, not financial advice, because if something happened to Elon, the stock could sell off heavily. But understand that Optimus and FSD are going to be what you saw in NVIDIA times 2. So just with that market cap and what is anticipating there, especially because a lot of truck drivers and stuff, you have to understand a lot of truck drivers right now, nobody wants that job. And so with these Freightliners, you're going to need FSD. And that is no joke. That whole essentially sector is hemorrhaging, trying to get people in there to start working, because nobody wants those jobs, because they know they are dead jobs. And so especially with FSD, that could solve that very easily and help us maintain production, and understand we may get to a period where we could be hurting, and why inflation may continue to go up, because that industry is a lifeblood of essentially our economy. If that goes under, that's going to collapse everything. So again, it plays a huge part in that. This also plays a huge part in humanoids, and understand there's a lot of other jobs that aren't being again fulfilled. So not saying to go all in on this account, but you should consider this account. So just be mindful of that. And Tesla, and I know everybody just thinks it's EV, but they are a tech company first before anything else. And so what we need to be watching again is this where it's currently sitting at the 220. It needs to hold that level again on these higher time frames. It could even dip down below 200 briefly, especially if we start pricing in a recession. But this is the dip. It definitely to buy, because I think you're going to see new all-time highs with Tesla, at some really incredible levels, I think. So you just have to keep that in mind. But again, not financial advice. Palantir, again, massive rip up, started selling off pretty heavy, but held support roughly here again around 25. I think once this thing turns over, I think this thing can break down even further. But again, it's still holding essentially this channel. There's actually a full channel here, so just keep that in mind. This channel, gotta love TOS lately. This channel it's been holding, so we're kind of watching this channel on Palantir. Ultimately looking for this to at least correct back down here to the 223 mark, and then we'll essentially kind of take it from there. Also kind of watching Amazon a little bit. I want this thing to pull back a lot more. It's just starting to pull back. You're starting to see a lot of pullbacks in Max 7. So just keep that in mind. Google got absolutely obliterated. Didn't help that the OpenAI search engine came out. But right now, again, it's still kind of roughly holding this 175 mark. So we want this thing to break down even more. Again, I would really like if I'm going to start purchasing this, I want this more around the 142 mark, maybe even 126. Again, this is a real solid deal. If you can get it under 100, will we see that again? I think you're really pressing your luck to think you may see it under 100, but you never know, especially if we start pricing in a recession. It could get really nasty really fast. So just keep that in mind there. Now, Palantir. I've talked about this multiple times. Palantir, I really like what they're doing. Again, great buy zone here, roughly around the 58. Wouldn't be surprised if we're pricing a recession, this thing tags 50. So you have to keep that in mind. When you're doing these long-term swings, they can dip down. And so it's important to know that this can go down to here. Even though it's consolidating here, it can dip down here. Like I've always talked about, when there's a bigger move to the upside or to the downside, typically you'll get a massive correction up, and then the thing will correct down, just like you saw a massive correction here, and then it goes up. So essentially, institutions try to get more shares and understand that people have essentially their stop right below these zones, and so they try to tag them out. So you get these massive spikes down, and then that's when the thing really starts ripping. So you just got to keep that in mind. Again, still really like PayPal moving forward. And then I want to take a look at NVIDIA, as this one has been really dictating where the stance is of the market. It looks like we finally got a break here of this 113 mark and a retest and a rejection. So if we can't reclaim the 113, that's going to be a big problem for NVIDIA. I won't be surprised if this thing drops down to 90. I'd really prefer to buy it more around 90 and then start heavily adding roughly around 76. And then ideally, if we can hit 50, that would really where you would want to go heavy. But again, we don't know if that is going to happen. So you want to watch these other zones and slowly increment in and not heavily buying up on here because you're still very close to the top. Even despite the drop, you still want to at least try to reach down to the 89 mark before really doing anything with NVIDIA. You have to understand NVIDIA is going to get to a very slow point at some point as well. You're kind of playing hot potato right now with NVIDIA, especially if the market starts rolling over and we start pricing in a recession. I don't know how much of a correction you're going to get there. So now that we'll take a look at, of course, BA, because it's our value play. Value's actually been doing extremely well, and they're trying to anticipate that's going to hold up the market. Value will have its pump and then it will sell off. The value by itself cannot hold up the market. If financials and tech start taking a dive, that's going to be a huge problem. Value is starting to creep up slowly, but now that we're starting to get more earnings, we'll see how that reflects. But I think a lot of them are going to do really bad still with interest rates being high. But again, a lot of consolidation here. They do report earnings on Wednesday, so we'll have to see if it can break essentially above 200. It's a more positive sentiment. We'll see if it will essentially be taken over by the government or not. Or if it breaks this 168 is going to be highly concerning for BA. So just keep that in mind. So we are watching that one closely there. And then we are also watching, of course, we always have to bring up JPM, JP Morgan. I'm probably staring right at it and I still can't see it. It should be close here. Here we go. JPM again has an ascending wedge. It kind of broke out of that and then broke back into it. So Again, I'm not anticipating this thing to do very well when the market starts turning over. I think financials are going to be absolutely slammed. So you do need to be very careful about that. And again, it can reclaim 75% of this move. So you could potentially see this down by 156 when we really start selling. Again, when that starts selling, when we start cutting heavily very quickly, that is your sign that we're pricing in a recession. And then at that point, we don't know what other events can occur that can add to the downside. So you have to keep it. Once it starts getting momentum, it could potentially really start selling. There'll be a lot of fear, and that's when you really start buying at that point. So we'll see what happens there. But that's what I'm looking at moving forward there. As far as any other buys, there's some great values. Some great values have actually popped up a lot already. So if you haven't already taken advantage of some of the value stocks, Nike, some of them, if you're looking at more like longer term, but now that big tech is starting to turn over, pretty soon you start. Tesla, I think, is one of the best buys right now. And PayPal is another big one. But again, in that financial realm, SoFi is a big one in that financial realm. You have to be careful because when we start selling off heavily, those will be heavily impacted. Where Tesla and some of these other Mag 7 can support themselves a little bit because they did do a stock split to try to help them a little bit. So just keep that in mind. But if you made this far, I do appreciate it. Go ahead and drop a like and subscribe. And then I will see you guys on the next one.